here with my banker, guys. I brought my banker in here. This is the guy that my money's in their bank. For many of you that listen to this show, you know that back in last year, November, December, Bank of America, man, it just gave me the boot. You know what I mean? And luckily I had ran into you, Mike, like, maybe a week before that. And I was like, they told me you're going to have to find a new bank. And I was like, I know a guy. This is like perfect timing. And honestly, for me, it's hard to leave a bank. It is, because you got automatic drafts and everything over there. So for me, it was like ripping the Band-Aid off. It forced me to get over with you guys, which has really been a huge blessing. So, the reason why I got you here, Mike, is, a lot of talk in the news about banks and everything else. We got the Silicon Valley Bank that fell apart and everything else. And I know that the public's got a lot of questions. So what are you seeing out there? It's the state of banking right now, because a lot's changed the last 3 weeks.
Oh man, yeah. So let me start off by saying thank you for having me here.
Yeah.
And actually, thanks for being a client. Relationships are everything, man. And the fact that you had mentioned, the situation with Bank of America, which obviously when we met, I didn't know anything about that, and it just popped up on you. A lot of things that can be fixed is just by having bank relationships. Now, talking about SVB, I'll just call it Silicon Valley Bank just by SVB. So use that acronym here to make it short, but they failed for a weird reason, and it's a reason that wasn't ever accounted for through Dodd-Frank or anything like that. They were actually cash heavy. Most banks fail because they're out of cash and there's a run on the bank and there's no money to give them. They actually were cash heavy. They just made bad decisions with the cash. So they, instead of lending the money out like typical banks do, they were so cash heavy. They took that money and they started investing in things like treasury bonds and things of that sort. But as you know, in the past 5 years, rates were been very low. So those bonds weren't producing any rates. And then obviously in the next last year and a half or so, rates have spiked.
6 months.
Yeah, right. Yeah. So, rates have just went from, 3% all the way right now. I mean, crime is right around 8% right now. And now you have customers, wanting to get their money back, but their money is tied up in treasury bonds. But not only that, they're not making any money. So when they cash those bonds in, they're upside down.
Right.
And then once people find out, all it takes is one big depositor, like in this case, to say, hey, I'm going to yank my money out. And then they call that a run on the bank. And that's when everybody starts going to a bank and taking their money out. And, people don't understand that most banks don't, the money they have on their balance sheet, that's the cash, the cash value, but it's not the actual money. You can just walk in there. You couldn't, even you, Ryan, you couldn't walk in my bank and say, hey man, I need to just draw $1 million out. We would tell you, hey man, you got to give us a couple of days to gather that up. Yep. It doesn't work that way. So if you have a run on the bank and everybody's coming in at once, the bank just doesn't have it. They're going to fail.
And they're leveraged.
And they're leveraged with the loans and things they lent out. So it was just a weird situation that I'm going to say that it's probably going to be 2 or 3 more that this happens to. If the Fed doesn't step in like they've been trying to. There was a bank in New York where they stepped in, and and Swiss Bank just bought one of their competitors, a credit union that that was heavy in Swiss, and now you probably heard in Germany, Deutsche Bank is struggling right now too. So it's happening, and it's slowly happening. If you all not old enough to remember 2008. This is the same thing, different scenario, because this 2008 was more mortgage based. They were giving every Tom, Dick, and Harry a mortgage with only 5% down.
Zero,
or zero in some cases. That's why there is a 20% requirement on all loans. That's just because of that. We learned from that. We'll learn from this one, but this one is just interesting that it wasn't a actual loan based. It was more cash, mismanagement of cash.
So how does that create like a trickle-down effect for other banks? Because here, I can only imagine if they're like, hey, this bank's in trouble, there's got to be people maybe scared and going to other banks and withdrawing cash, which pulls back. What could be like the big consequences with the trickle-down effect from that, do you think?
Well, the big thing is, so you have what they call the banks that are too big to fail, which are the
Chase, Bank of America,
Wells,
Wells Fargo.
you know. So you have those three, right? They're too big to fail. The thing is, they don't care about the little guy. You're never going to get a loan from them. They just want to, hold on to your money. But the mid-market tier, which I kind of fall in, that the banks that are between, $5 billion and let's say 20 to 25 billion, what we have to do is just, manage correctly. There's two different types of banks. There's the retail bank and then there's a commercial bank. B1 Bank, where I'm, market president of, we're actually a commercial bank. So you never hear about a run on a bank on commercial banks because we don't have a lot of retail traffic. To actually do the run on a bank, that term they use, you need consumers to start lining up and taking money out. Well,
Right.
80% of our customers are commercial owners. They own businesses. They own their real estate. So that's never a case because they're safe and sound. They're not going to run on the bank per se. So the last 3 weeks, we've been getting an influx of deposits from people, just business owners just said, this is a safe haven. We're going to put our money with you, and move out of that, that retail scenario where, I can go to the bank and my money not be there. So,
yeah.
And so you're getting what I say, to that, just like, how is that the trickle down effect? People are getting smarter, right? So the business owner first is going to get smarter. The retail customer is going to get, I think they're going to realize, next that they need to wisen up too. So one thing commercial banks do, right? We have ICS accounts and then we have what we call CEDAR accounts. CEDAR accounts are basically, we take all anything over $250,000, we spread across, multiple banks that are, and like I say this, not just any bank, multiple banks that are CEDAR approved. So you have to be approved in the network. So that's usually obviously the big three are part of that, and then there's about 25 to 30 regional banks that are a part of that program where we spread the money out and make sure we're all your funds are safe at all times. And then ICS is the exact same thing as CEDARs. The only difference is ICS is for money market accounts, and the CEDARs are like CDs. So if you have a CD, you have a big CD out there, but you want to make sure that CD's there in 12 months. We'll throw that CD in the CEDARs program, spread it out for you, do all that work for you, and you're 100% protected. Federal rise, and I can't speak for the federal government. The government can always fail too, but that's we're America. That's a slim chance of happening.
Right.
They
get all this free money getting
right.
It's hard.
Yeah, so it's all about access. CEDARs gives you less access because it's in a CD, but the ICS accounts is just typical money market, and you look at it like on your app on your computer, and it looks exactly the same, but it's spread out over multiple banks. So business owners have been flocking to get that already done. The consumer, they're always late to the party, and I can start seeing that happen next. When you talk about the trickle-down effect, it's going to be more so of protecting money versus seeing how much interest I can make off my money.
Right.
And that's where I see the transaction, the trickle-down is happening right now.
Yeah, and I'm glad that you brought up the CEDARs and all that. Since I've met you, I've learned a ton about banking programs that exist that they just don't share with you. I was with Bank of America, like I was saying earlier, for a long time, and you don't hear from anybody or have a relationship with them. And the knowledge that you're sharing with us, how you spread the money out and all that stuff, that's something that you've got to have $100 million or something to learn from them, and getting with you guys in a commercial bank and stuff like that, somebody that actually can understand this and protect it, that matters. You know what I mean? Like, versus just having $2.5 million in a lump sum sitting in one of the big three accounts, that something could happen, or a small SVB type account or a regional SVB type of bank that something could happen, versus having it spread out to where it's at least protected with FDIC guidelines and stuff, man. That's just little things like that make all the difference in the world, that a lot of people don't know about.
No, I agree. And, in the banking world, it's all about, and I think a lot of people have lost sight of that on the even on the consumer side. I mean, just on the retail side, is that you should be able to go into a bank and somebody, at least one person in there knows your name. That if you're if you have the correct relationship. I tell all my clients is like I limit my client base on purpose, because there's no reason for me to get in a ton of clients and then I can't service them all. You should be able to text me and then me get back to you within 24 hours, or call me and I get back to you within 24 hours. I mean, it's getting to the point where people try to do more with less, but that's not always great for the relationship aspect.
Yep.
And it starts. You can start feeling it, especially in banking, because usually in banking, people start thinking it's just transactional. Okay, I just need somebody. I just need to make sure my my system works. I can do the debits and credits. But then when something goes wrong, and the first time you have to hit that 1-800 number, you realize, I wish I would have had a banker I could just call and like just say, hey man, can you just get with your people and just tell me what's up? Yep. That's a thing that people don't value until it's too late.
Absolutely. I spent 2 hours in the bank this morning getting old statements printed. So for my accountant. So I feel you. So what's next for the banking industry? They're talking about, the government may change to digital currency and all this other stuff, which if you think about it, currency's already digital anyway. It's already just numbers that we see on a screen anyway. Like you said, if you go in somewhere and you ask for $1 million cash, I think I got $150,000 cash from you guys one time. And I had to order it 3 or 4 days ahead of time. That's just, and it's like that with any bank anywhere, and you guys hear or get bulletins or anything about that kind of stuff yet?
Yeah, and I'll
just put you right on the spot.
Right, people might differ with my thoughts on this. I believe cash equals freedom. Once you start creating a digital trail for yourself, it's tough to to have that freedom. And and somebody may argue, well, what are you talking about? Something nefarious? No. I mean, just to be able to do what you want. Not everybody needs to know what's in your business. And cash gives you that luxury of just, I want to pay for this in cash. I don't need a paper trail. I just want to, I want to go on a vacation. I want to, you don't need to know every martini that I put down on my tab and all that.
Could you imagine you being an underwriter? You know what I mean?
Yeah.
And they're looking on the blockchain and all the stuff that you bought here, and the underwriter's like, oh, really? 17 martinis like 3 Saturdays ago, huh? He was really turning it on there, like. Because all that stuff would be there. You're right. It would be one giant ledger.
But on the other side, I'm a digital guy. I listen to like Mark Cuban and things, and Mark Cuban will tell you that he still 100% believes in cryptocurrency. I actually do too. I think it's something I keep a small amount of my portfolio, maybe 2-3%, just because I'm not as wealthy as most, but so I dabble in it a little bit. But I think it's something that you still want to hold on to, because you never know, for one thing. And we are going to go to a more digital platform, and crypto's the front runner right now. I'm not saying it will win, but it's the front runner right now. You always go, it's leading right now on that on that digital front. And as far as cash and banks and cash. Banks would like nothing more than just to go digital, because the dealing with the paper, it's a process. You need manpower to deal with paper. Yep. You start cutting out the actual cash transactions. You cut out the amount of employees you need, the amount of workers you need. You can already see it kind of like at Walmart now. They have all these self checkout lanes, and then you'll see that you go to the self checkout lane and they'll have this one's credit card only. So they have one machine out there that dispense cash, and the rest of them like credit card only, because the credit card only allows that person that Walmart to operate like 8 different machines with one person. And that's so I can see the from a business aspect. Hey, if I want to cut down my overhead, this is the way to go. But I just still in my heart, I just believe you should have something that you can something tangible that you can have that's not tracked all the time.
I think the cool thing about the blockchain is, I own a bunch of cars and a bunch of 4-wheelers and ATVs and tractors. So I have a ton of titles, like pink slips to vehicles and stuff. Having all that with a digital, like an NFT, basically like how the monkey pictures were, the Bored Ape and all that stuff. Having that to where when you went to the DMV or whatever on your phone, you just got the titles and stuff on there. I think that'll be huge too. I buy something from you, it's on the blockchain. Now that title's in my wallet.
Right.
That'll be huge.
Yeah, the instant transfer ownership is crazy. And even like on I could see it like on real estate. That's where I think it's going to be kind of big. Just like, you could cut out a lot of people with the transaction, the title process. You could transfer title digitally. That's where I think we're years from now, hopefully in the near future, that it's going, because that'd be cool. I can say, hey Ryan, can you sell me an acre? And you just like, here, just
Just pigeon off. Yeah. That will be cool because now it's not that easy.
No, it's not that easy.
I just got to a point this week actually where all my houses are rented out. So that most of it, you think as a real estate owner, like that's going to be the case all the time. But maybe if you have one or two, but you have as many as I do, there's always a 10 to 20% vacancy you're messing with. This is the first time that they have all been rented out. So it's like. It's nice. We'll see how long this lasts, because we got leases that end pretty much every couple months at this point because the amount of houses I own. But it's a good feeling to have them all rented out. But again, that's something that, every time I need to look up records or whatever, I got to go dig through files and look up a ton of emails and stuff versus pull up the blockchain with all the info on that house. That would be, especially with renters, like here's the screenshot it. There's the gas company information that you need and all that stuff. That's where we're going, I believe, with all this. So it's not just money's the leading factor, the carrot on the stick, but I think it'll really tie everything in it. And if I remember correctly, I saw a documentary where this is like basically how everything in China already runs anyway. It's all done through, it's not the blockchain, but something similar. You own car titles, everything on your phone, bank, social media, all that's under one big app, which is, it's kind of scary on one end because like you said, they know everything, but on the other, like it surely is convenient.
Right.
You know what I mean? So anything else that we should know, like anything that's up and coming or maybe something down the pipe with the banks that we need to worry about? I was talking with a friend the other day and a billionaire got, hundreds of millions of dollars in cash. And he was with some, I think he said he was on a conference with like 57 regional bankers and stuff like that. And they were going over some things. And a lot of these places may have loaned money out at 4%. Now, like you said earlier, prime is 8%. And there may be less money because, you got inflation going up, you got interest rates going up. So let's just say there's 10, 15% less money on the plate for bang for your buck, right? Which means deposits go down because they're having to spend more money, which can count that leverage. He said a lot of the banks are getting audited. In a sense that they're making sure that they're not over leveraged and they're meeting their criteria and everything. Have you heard about that, or do you know that there could be some ramifications through the banking industry for those audits and stuff?
Oh yeah, so right now we're being audited. It's not a
like speaking of which,
it's we're in the middle of our bank audit right now, which is it's common in banking. Obviously, you want safe and soundness. They call that a safe and soundness audit. So they look at your largest deals where they'll set an amount, whether it's anything over a couple $1 million, we want to see the file on it and go through it. What's interesting right now is that we're seeing that
don't look at the Stewman file.
Actually, that one's pretty nice. So I showcased that one. Hey, look at this. Look at me. I did a good loan for once. No, but yeah, so we're our safe and soundness exam right now. We're passing with flying colors. But they'll have something like some recommendations. And right now is we banks run off of this what they call net interest margin, right? So the money that we get from either the Fed or deposits, we lend that out, and then obviously the gap in between is our margin that we make, right? And so most banks want a net interest margin of 4%. So if right now rates are at 8%, banks want 12. But that's the outside thinking, right? But that's not our money cost, right? So the prime is a number that's set, out by the Fed. With the bank, what it costs for the bank to get the money is totally different what you see at prime, right?
Right.
So for instance, if our cost of funds right now it went up because rates are up, they're at 4.2%. So we're trying to make 4% on that. Right. So that's why our rates are at 8%, which is right around prime. We want to be right there. And now some banks, the more deposits you have, the less that cost of funds number is. So if you don't have to borrow from the Fed or anything like that, and you're deposit heavy, then you could charge less rates because your cost of funds are low. And that's what you thought when you saw with SVB. That's how it should have been. They were so heavy with cash. They were like, that bank should have flourished in this market. Yeah. They should have took over the whole West Coast. But instead, they made bad money decisions, and it just went under. Like us, like my bank right here, we're publicly traded. So we abide by there's certain rules for being we're $6.5 billion bank. So there's a certain rules that apply to banks over $5 billion. There's certain rules that apply over banks that are over 10 million and 20 million and so on. So we're in that spot where we're just above $5 billion. So there's some metrics that we have to hit too, that to keep us a safe and sound bank. One of those is our credit, our ability to borrow money. So when we first heard about SVB, the first thing our bank did to our clients, if they wanted to know about the safe and soundness, we just showed them we just kind of talked about our credit availability. So for one thing, our credit line at our bank is $1 billion on top of all the deposits we have. So that's, even though we would never have a run on the bank, if we did, we would never run out of money, because we just tap into our line of credit and just say, hey, we have more credit than we have,
20%,
right, than deposits and in cash on hand. So we're cash sound. So we won't never run into that issue. I think in this environment though, you'll see more banks being more cautious on what they lend to and how they lend money. They, that SVB, for instance, they were a lot in the tech industry. They were doing a lot of financing startups that had that wasn't proven, So it's going to be a lot more proven lending, okay, how long have you been doing this? Ryan, you've been in this business X amount of time. Okay, I'm okay with you. It's going to be it's going to be a lot less entry into the new entry into the market, which is going to it's going to suck, because obviously if you want to start a business, you want to be an entrepreneur, you need help just like anybody else. So I think that's where it's going to kind of hurt for a while. It's just people are just going to kind of shy away from the startup guy and the new guy and the new business owner guy, which is unfortunately it's pretty sad.
We saw that in 2008 though. You went from zero money down to credit card rates being credit cards give everybody to all of a sudden just pull back massive. And eventually the dust settles and it goes back. My grandfather called it regression to the mean. It always goes back to the average. You know what I mean? Which is where we were prior to all this. We were somewhere in the average. Historically, rates have been too low for mortgages anyway. We've been spoiled for 10 years because rates have been low to try to get things running back. Now they're actually where they probably should be higher. Technically, if you were to look at it historically, they probably should be around 10% right now.
Yeah.
If you adjusted for inflation stuff, the Fed's been, even though they might or might not be evil, they've been nice to us the last 10 years with low interest rates, So, the banking thing, what you see different programs coming down, or do you think they might change it from, you're saying commercial banks do 20% down on the things that they're doing. You think they might change it to 40% or 30%? They might increase stuff like that to cover some of that, or you see anything like that maybe happening?
I hope not, because I think it's fair lending. Everybody has their skin in the game. You put a little skin, and the bank puts their skin. But unfortunately, I think maybe I to be honest with you, already on land loans, banks like to have they'd like to do a 60-40 split on land loans. That's just because land doesn't generate revenue. It's just land. It just sits there. So I could see which doing this will only help the richer guys, right? Because the richer guys are like, okay, well, I'll put another 10% in. Which is unfortunate, but we haven't went that way yet. But I could see from a banking industry as a whole that they start asking, okay, well, put more money or your money into it, to get these projects and get these development deals done. But yeah, it's just a sign of the times, and planning for something like that. Most people, if you have a business right now and the rates are so high, it's actually advantageous for you to try to put a little bit more cash in it, because the rates are so high. It can kind of not have, if you got a certain X amount that you had planned on spending a month, and now it's like elevated 4%, you may want to buy it down anyway just to to maintain your cash flow. My friend was also telling me that they were mentioning that he said they said it's a possibility in the future, and he was just telling me so that I was prepared. He's like, banks may go back. Let's say this building, we bought it, right? But let's say that I paid $10 million for it, and all of a sudden it's worth $6 or $5 million, in the next couple of years because of inflation and hardships and the office buildings going. He's like, man, you need to stack your cash in case they adjust these notes and stuff as well. He said that was something that he's like, it's a looming possibility, and better to be prepared for it. So yeah, it's on the and I use that on the office and light industrial side. Any building that needs leases, Like you lease up an office tower, right? And you set your lease at let's call it $30 a square foot, 5-year term. You're in the midst of that though, you're 3 years into it, you're at the end of term with your bank note, and you need to either refinance it at another bank or extend the term. Now that building that you thought was worth $10 million 3 years ago, let's first say it actually decreased and now it's worth $7 million. That might be a problem.
Yeah.
Or controversially, let's say it's still worth $10 million. But back then, when you did all these leases, you did them when the rates were like 3-4%, and now you're having to renew that same note as it is right now, but the rate's 8.5%.
Yeah.
You can't go back to those tenants and say, "Hey, I need to redo my lease," because a lease is a lease. It's hell or high water. They're just gonna look at you and say, "That's not my problem, bro. That's yours."
That's why we locked it in.
Yeah. So you're automatically underwater on all these leases that you just did. So I think that's the bigger problem versus the actual value of the building going down. It's the lease rate factor. Owner occupied. Like buildings like you're in. I think you're good because most of the time, you don't have to worry about that is when you try to refinance it out and go to somewhere else. When you just renew it, your appraisal just holds as is because you had the appraisal at X and you're just you've been amortizing it down the whole time. So there's no reason to go back and do another appraisal and do all that stuff. And it's owner occupied, so you control your own cash flow. You're not dependent on lease revenue for the building to support itself. So, but the office industry like that, I'm quite worried about that. Bubble's about to pop. I feel
it's funny you say it that way. I hadn't thought of that, but a lot of commercial buildings, they do 5 and 10 year leases, minimum 5 years. So 2 years ago when they locked in a 5-year lease, you're right, interest rates were 3-4%. So if you're on a 5-year note and it's redue and you sign a 10-year lease with somebody at 4, you can't raise their rent. In most commercial leases, they have an increase every year. There's a little bit more, but not a dramatic double your money. Not a 4% to 8% interest rate on the building increase. That's a big difference.
Right, and you can get away with obviously the CAM expenses with the taxes and stuff. All that stuff kind of adjusts on its own, which. Right. But yeah, the rate itself, you're kind of screwed there.
So what do you do when you're not a banker?
Oh man, I'm a husband of 3 kids. I got 3 kids. Beautiful wife. I got 11, 8, and a 2-year-old. I serve. I live in McKinney, so
McKinney, Texas, for people across the globe.
Oh yeah, that's right. Yeah, this is international here. No, I live in McKinney, Texas. So I do a lot in the community there. We have we have 3 big charities that I'm involved with. One Heart McKinney. It's basically it's a charity that actually brings all charities together. So if you need food, if you lost your house, and and your car payments past due. You come to us and actually you tell your story one time. So I have to tell your story 10 different times to 10 different organizations to get funding. And we go out there and we help you get back on your feet as quickly as possible.
Through y'all's network, reach out to the other charities that can help.
Right, and obviously
that's awesome.
And obviously being in banking, you have a network of business owners that you can rely on to help in and pitch in for that sort of thing. And in Hugs Cafe, for instance, it's a restaurant that only hires adults with special needs. And so we fund that restaurant. We teach adults with special needs how to be the waiter, how to bust the tables, how to cook, how to wash the dishes, and and we're actually expanding on that now that we found out the model works. We're trying to bring that Hugs Cafe and integrate those workers into everyday restaurants. Because they have the skills, and actually we finding out that they actually work harder.
That doesn't surprise me at all.
Yeah, so I'm very involved in the community, and actually right now I'm actually running for city council for McKinney. I've been chairman of the Economic Development Board. I've been on that board for over 5.5 years, and with the Economic Development Board is we get a half cent of everything every purchase of anything you buy in McKinney, so 0.5 cent of the sales tax, and we use that money to incentivize corporations and businesses to come to McKinney, by giving them, infrastructure grants and, employee grants for moving employees over. And, we had a budget of, before I left the board, which is 3 weeks ago, actually, when I decided to run, of over $22 million a year. So managing that, and then actually resigning off that board to run for city council. And, I'm running just to elevate that. I've been doing that. I've been working with McKinney for many years to bring commercial development on there into the city. So now we're, got the support of all council, the mayor, all the districts, and they're like, hey, we want you to elevate that to a higher level. Let's see what we know what you can do. So let's do that on a citywide level, and bring this commercial development and increase the commercial tax base for all citizens of McKinney. So I'm excited to run. Obviously, I'm endorsed by the police and fire of McKinney. They got my back, I back the blue. They back Micheal Jones. So it's it's a great feeling. I'm excited about it, man. And the election is May 6th. Early voting is April 24th. So if you do live in McKinney, I would love your support. Just come on out there, get to know me. It's michealjones.com is my website there. You can learn everything you need to know about me, and then even on there is my email. You can just give me an email and I'll call you, and we can talk about any issue you have.
Awesome. And what states are you guys do you guys bank in?
Right now, B1 Bank, we're based out of Baton Rouge, Louisiana. So we're the number 2 bank in Louisiana. And in Texas. And so in Texas, we're just in North and South Texas. We have a regional location here in North Texas, which is Dallas-Fort Worth area. And then we just purchased a bank in Houston, and now we have 8 locations in Houston. And we're not really going to buy any more banks. We're going to grow organically just to connect the North and South together. So we're going to start, going through the woodlands up north through Austin. Yeah, just build branches and just filling the gap organically versus just buying up another, bank or two. So it's good. So it's slow growth is the right way to grow, and so I'm excited about it. And, like I said, I'm the market president over McKinney Allen. And so, if you ever need any banking needs, loans, obviously, we love deposits. Just come see me. I am there for you. I'm not just a guy just take your information and run with it and then come back with a yes or no. If I can't do it, I make sure it gets done somewhere else. I don't accept no for an answer. So if you have any projects out there, you need help, or you need some guidance banking wise, please feel free to contact me. It's Micheal Jones, and it's micheal.jones@b1bank.com. Just send me an email and we'll get to talking.
And if you're in the city of McKinney, go vote for my man. Go vote. Give him opportunities. Worked on the economic development board, like you said, man. It's $22 million budget. Give him an opportunity to keep the city of McKinney in line and give them good counsel. So if you're in the city of McKinney, go vote for Mike Jones. Micheal, thank you very much for coming on the show, man.
Very thanks, insightful. Ryan. I appreciate you allowing me to be here, man. I'm grateful.
Well, I'm looking forward to the I got elected to city council party. Just make sure that I'm there, man. I just want to get an invite to the party.
Oh, the party, yes. Oh, yes. It's hard work, but I think we're gonna get it done.
Yeah, absolutely, man. Well, congratulations on everything, dude. Appreciate you.
Thank you. Yep. Appreciate it, man.